Hi friends, welcome to another video. We are doing today con call analysis of Balakrishna Industries. Basically, they're a leading tire manufacturing company, and they mostly into agriculture, vehicle, tractors, tires, and things like that. Their con call I felt was very easy to read, and it was like half an hour long. That's all. So yeah, let's do the analysis, and here are my picks from their analysis. So if you like this format which I'm doing in, please do hit that like button and comment if there are scope for any improvement. So opening remarks by management was that there are macro challenges. That is, one is recessionary fears in USA, Europe, everywhere in developed world. Then there is geopolitical tension because of war between Israel and Lebanon, Israel and Hezbollah, and then there is Russia and Ukraine. Then inflationary raw material prices are there, and then high sea freight costs because of Red Sea crisis and other things. So management says except India, all the other places demand is very low, but India is a somewhat stable demand. And they said that capex for 30,000 metric ton and per annum of high advanced carbon has been already started from September, and this carbon is not for tire grade, it's even a higher one which can be used for other purposes like manufacturing, specialty chemicals and things like that. Then they have also announced the tire capex, which has already begun, and towards the OTR tires, that is off the road range of tires. So they expect the completion to be done in first half of financial year, next financial year. Sorry, financial year, yeah, next financial year, first half. That is phase one. Then person has increase in raw material cost, freight cost, and how is its effect on margin. So like and the so the company says that they took a price hike in Q2 of around 1 to 2%, but this was done like after half of Q2, so the full impact will come in Q3. And the management says that demand outlook is very weak, and inventory, there is no such problem, but demand is low. And they also say that OEM replacement demand is somewhat fine, but OEM demand is not strong, and it's not going to come back in future. In fact, OEM demand, there has been degrowth, and they're expecting 25% margin in this quarter, in the coming quarter as well. And like for a whole financial year, they're expecting around 25% margin, which is similar to what their margin used to be. Then freight cost, they are expecting it to be at this high level in the near future, which is around 7.4% in Q2. Even if it comes down, it might come down very marginally in Q3, is what the management saying on freight costs. Then one person asked EUDR regulation. So basically, Europe has put regulation that almost all companies should source its raw materials, its factories, and everything should be carbon neutral. So if the company is ready for that, so the management said that company is already ready, but EUDR has been postponed by another 1 year. So even if it is implemented, it will be implemented in December or November 2025. Then the Euro versus INR calculation is like they have taken it as 91 in Q2 and 92 it will be in Q3. So little higher realization will be there for them in Q3. And given that there will be price hike and hopefully raw material cost will decrease, and then freight cost also might decrease, so Q3 will be, I guess, hopefully real good for them. Then the carbon black which is being manufactured, how much is the revenue can we expect? So the management said that whatever is being manufactured, 50% of that is being sold, and they say that it will add less than 10% of the revenues which they have as of now. So that is not a, I mean, it's a major deal for the company. So on demand issue, if they want to give any commentary, so the management said that demand, they overall is weak. They can't do anything about it, and they are hoping that they end the year with a volume growth of whatever they had achieved in FY23. FY23 they achieved their highest ever volume. So the management is hopeful that they might be able to do slightly like single digit growth over that volume, is what the management is saying. Then one person asked other expenses has come down, why? So the management said that there was no IPL sponsorship this quarter, hence the reason. And also the capex which they are doing will be in the tune of 800 to 1000 crore, which has been revised from earlier said of 600 to 800 crores. And tax rate for them for an average is 23 to 24%. All these things were replies given for questions asked by some people, like how much is the tax rate, and why is that the other expenses are down, and how much capex they are planning to do. Then one person asked if because of India-China issue resolved, like will they be open to do joint venture and things like that. So the management said they're open for it, but if there are any good opportunities, like they don't want to just do it. If there are any opportunities, they're open for it, but they can't guarantee anything, is what the management said. And one person asked if there is any benefit for Indian commodities, Indian tire or Chinese in US. So the management said that as of now they don't see any such thing. So yeah. That is it. That was the con call of Balakrishna Industries. If you go through and read also, you almost get the same thing. Yeah, so thank you.